So if we get a confirmation at that level, 153.13 for instance, we go full size. Now in reality, I just jump only two tops to place my stop. So this is top 1, this is top 2. This is of course too high. I would use this is top 1, this is top 2. You're looking at 155. In actual reality then, I would just have a stop above level 2, alright, or a hedge. Now I don't use stops, so I would have a stop at level 2. Here, this is level 2, 154.5. If I want to be too conservative, it's going to be 155, a hedge. I calculate my risk. If I'm entering at 153 and I'm having something at 155, it's around 200 points, so maybe I'm only using just half a standard. Half a standard gives me $1,000. This is what I can manage. If the market moves higher, all right, opens these hedges, I can take short-term profits at 155.30, 155.50, add these to my equity and wait again for the market to cool off, reopen the hedges. If it moves higher again, I know now how to match. Usually if I do have that confirmation on the 15 minutes and on the 5 minutes at that level, at any of these levels that I've already left feeders at, feelers, not feeders, feelers at. Feelers is feeling the level, if it really is going to reject or not, like all of these red arrows here. So I can actually get a rejection at none of these levels that I have on my fib projection. I have to be broad-minded and I have to do a good monitor. So I may be too focused on that I'm going to get a rejection at 153.15. It's going to happen at 152.5. If I'm not there, then I'm simply not doing my job. And even at 152.5, it gives me a better entry potential, because 152.5 to level 2 here, 154 is just 150 points. 154.5 to 100 points, 152 actually is 150 points. So I'm much better off with my risk management instead of 200 points, of course. And I could understand that if I reject at 152.5, I'm actually seeing ahead and that this neckline has been respected. My stop really has to be very compact, just at above level 1, not even 154.5. If I break any higher than this, I can immediately implement hedging. Alright, so I have to keep a broad mind on it and understand that I could get a rejection at any level lower than where I have left my feelers, and at that point I will only have one feeler that has failed. It will show me good profit, and I know then I can sense that the market is really very aggressively bearish. Alright, let's take a look now at the current entries that we could do today and how we're going to implement that strategy. You can see that 154, these are the weekly pivots again. 154.5 is really the ideal hedging point or stop level, and we're looking at 152.7, 153.16, these two levels here. If you're just short-term traders, you'd only go for 151.48. Longer term, it's of course 149.7. Short-term traders, you have to relate that actually could do better than long-term traders or intra-week traders. You are not exposed to volatility for the same duration, so I will get to 151.48 very quickly. If I'm successful at shorting 142.70, I'll probably get to 141.48 next day. Just 24 hours duration. If my size is right, if my gear is right, they call it gearing. If my gear is right, then even in this very small span, I could do good money. I could do $1,000 on this. It's about 100 points or even 125 points. On a standard, it does 1,200. So it's just 24 hours job. The job is finished. On the other hand, if I'm longer term, if I'm going to take this all the way to 149.70, I can always get adverse volatility. The market can move against me. Of course, I'm not as efficient in profit as maybe sometimes I'm short term. It depends again on the cycles. If I'm complete cycle 3 on the daily, I would confidently go to 149.70. If I don't have negative momentum on the daily, then of course I may just go for the lower noise bands. Always do the gear right. Gear the position, meaning that use a correct size and know how to protect it so that you really make usable or money that is actually of value to your equity and to your account. We're looking at that wave here now. This is the count correction. When we go live on the market, you have a 1-2, an internal 1-2-3. Any correction forward will take you to these levels we're talking about. 153.10 showing here, 153 even 40 over here showing at 153.50 below level, just at level 1, and 152.80. So I will have feelers at 152.80, 153, 153.30. Let them get filled, check the momentum picture, and go short. We are now 151.58. This is just a 1 hour chart, very dismal momentum of course.